Now, tell us a little bit about the timetable for reopening. We all know only a small portion of the floor brokers are back, only about 25%, maybe 80 of them right now. The designated market makers that make the markets aren't back yet. Some of the other major, bigger floor brokers are not back yet. Can you give us some idea? Is there a timetable for bringing everybody else back?
Now, just like we didn't have a timetable when we shut down March 23rd and it was not clear, it was going to be based on the conditions and the protections in place, it's the same right now. We started small with about 25% of the trading floor, as you mentioned, heavily skewed toward the businesses that are most impacted, the small and mid-sized firms, and we'll see how this plays out over the next few weeks. Reopening certainly is not going back to normal. That's not the point.
Yeah. There's been some very complicated legal and medical issues involved in the reopening, and I guess all companies are going to face this. The NYSE not alone on this. We've had a lot of questions about this indemnification agreement that you're requiring people to sign, promising to indemnify the NYSE against any lawsuits. There's been some reports that some firms are balking at signing them. Can you explain to us why an indemnification agreement was required?
Yeah, Bob, I think the most important part about that waiver is acknowledging that they're going to commit to following our protections. Keeping in mind that the traders on the floor are not employees of the New York Stock Exchange. So we don't have the ability to tell them they can't come in unless they agree to follow the terms of this agreement, which is why it was so important. That agreement is really focused on wearing your masks, keeping social distancing, and committing to take those steps to protect each other, to protect the others on the floor, because it's not just about protecting yourself and your own comfort level, it's about protecting those around you. Some of the big firms have chosen not to come back just yet, which is fine. No one is compelled to come back, not our employees, not anybody on the trading floor. What we're doing is opening up and saying they have the ability to come back if we can start to take things slowly. And so that's a decision made differently by each firm and each individual.
Stacey, walk us through the expected procedure when we get a positive case. You said in your journal piece that we're not going to eliminate risk completely. So if we get a positive case from the floor, does it close again, or is full closure again kind of off the table?
No, when we paused for the past 2 months, we took the opportunity to learn a lot about this virus. And what we've learned is how to protect ourselves. So it's not designed to prevent an individual case. Somebody may be exposed outside of this building, show up here, and we find out that they tested positive. The protections that we put in place have been designed to prevent from an outbreak so that that likelihood of infection passing around the floor is greatly diminished by the protections we have, like PPE, like social distancing. We've been taking the advice of public health experts and government authorities and state and local executives so that we can make sure that we're protecting the community as best. We've been working with Scott Gottlieb, the former FDA commissioner, who I know you know well, and he's been giving us some advice on this too. And we're all designed to prevent an outbreak.
So Stacey, let's think about this. Before, when there were, let's say, an IPO, there were a lot of people out there bidding. It was very exciting. Obviously, you can't do that kind of close quarters anymore. Did you find that things moved and were as smooth without people as with people?
What we saw was trading continued to function smoothly, but not quite as good as it did when there were people involved. So stocks trade with a little bit more volatility, a little bit less volume and liquidity, especially at the end of the trading day around the closing auction, where about a third of the volume in the closing auction comes from the brokers on the trading floor. So what we saw was, yes, things functioned. Electronic markets can run, but you lose that benefit of human judgment that dampens volatility, narrows bid-ask spreads. So that's what we're looking to reintroduce slowly.
Okay, and there have been companies that use temperature checks, but the temperature checks do not find the people who are in day 2 or day 3. Mm-hmm. What do we do with the people who are those days and can't really be found out through temperature checks?
It's all about layers of protection, Jim. So if you take a number of measures and put them all together, you reduce the overall risk. So temperature checks is just one of those layer of protections. PPE is another one, social distancing, all of those combined together reduces the likelihood of an outbreak.